The Dow and the S&P are on track for their fourth straight week of gains despite disappointing earnings from Google and Microsoft. Joining me today is Jonathan Corpina from Meridian. So Jonathan, it's kind of been a crazy week. We did see earnings from Goldman and Bank of America beat expectations, but in the tech sector, we did see disappointing earnings from Microsoft and Google. So looking ahead towards next week, we do see Apple, Facebook, AT&T, and Ford. How is sentiment going forward after this week?
Well, you're forgetting the GE earnings report that came out today that I think is keeping our market exactly where it is right now, especially with the forecast moving forward. But the sentiment right now is where it should be in the beginning of earnings season, just a little bit mixed. And I know that's not good for our markets right now, but where we are right now is earnings per share coming in kind of in line, some missing, some hitting it. It's really the revenue and the forecast moving forward is where investors are really looking. And looking at that GE report today, the open book the order book number that came in, which is showing orders that customers have placed over the last quarter, came in better than expected. So that is really something that if you have to dig down a little bit to see, you're not looking at the top number, you're not looking at the revenue, you got to find some other something else to hang on in there, and that's why GE is performing so well today. But I think moving into next week, we've got somewhat of a short economic calendar. Couple that with earnings reports, couple that with any other headlines that are out there that haven't popped themselves up yet. I think we're going to continue to see this momentum in the market, just because I haven't seen the reason to sell out of any short-term games so far in this month.
So for next week on the economic calendar, we will see housing data and durable goods orders. Now, durable goods orders haven't exactly had year-over-year growth from some time now, and especially with the Fed talking about we might scale back on QE, we might not, it's not on a preset course. If we do look at durable goods numbers, is that really where we need to see if the U.S. economy can sustain without quantitative easing?
That's one of the areas, and I think what's going to happen is that the government takes a step back and looks at all the economic data that comes out throughout the month and comes up with their formulation, and they probably focus on the numbers that they want to focus on and push other ones aside. But clearly durable goods is going to give us some sort of inkling as to what the Fed might be thinking down the road if the number comes out in line. Can we call that good news? Is it bad news? It all depends on how we spin it. We've got housing numbers, existing home sales, I believe, on Monday coming out, initial reoccurring coming on Thursday, consumer sentiment coming out Friday. So all these things coupled together, I think, are really good for our markets, just for investors to really digest. What we're trying to do is figure out when tapering is going to occur. We know it will. It's just a question of when. September, October, does it get pushed to 2014? All these dates on our calendars, the economic calendars, the earnings reports, the forecast going forward, all these things put together are going to give us a better idea of when tapering could possibly occur.